Imagine this. You've just received a bonus at work, or maybe you've saved up some money and now you're ready to invest. But where do you start? Should you buy shares in companies you believe in? Or maybe ETFs for broad market exposure? What about Bitcoin for high risk, high reward potential? Or gold, the timeless safe haven? Or, here's a thought. Should you invest in all of them together? Today, we're diving into the world of investing to explore the pros and cons of shares, ETFs, Bitcoin, and gold. By the end of this guide, you'll have a clearer idea of how to build a portfolio that works for you. So, let's get started. 1. Investing in shares. Owning a piece of a company. Let's start with shares, also known as stocks. When you buy shares, you're essentially buying a small piece of a company. If the company does well, the value of your shares can increase, and you might even receive dividends, a portion of the company's profits paid out to shareholders. In 2023, shares have had a pretty good run. The S&P 500, which tracks the performance of 500 large companies in the US, is up about 12% this year. Tech giants like Nvidia and Meta have been leading the charge with gains of over 150% and 190%, respectively. But not all sectors have performed well. Rising interest rates have put pressure on real estate and utility stocks, making them less attractive to investors. Shares are great if you're willing to do your homework and pick the right companies, but they can be risky. If a company underperforms, the value of your shares can drop. And let's not forget, the stock market can be volatile. Prices can swing dramatically in a short period, which can be nerve-wracking for some investors. So, if you're looking for high growth potential and don't mind a bit of risk, shares might be a good option. But what if you want something simpler and less hands-on? That's where ETFs come in. 2. ETFs. Diversification made easy. ETFs, or exchange-traded funds, are baskets holding assets like stocks, bonds, or commodities. Buying an ETF means investing in a diversified portfolio with one purchase. In 2023, ETFs like the SPDR-S and P500 ETF mirrored the broader market, rising about 12%. However, sector-specific ETFs, such as those focused on technology or clean energy, have seen mixed results. ETFs spread risk across multiple assets, reducing the impact of underperforming companies or sectors. They're also easy to trade, like stocks. However, this diversification limits potential for outsized returns, as you're betting on the overall market, not individual winners. If the market declines, your ETF will likely lose value too. ETFs are ideal for investors seeking broad market exposure without the effort of picking individual stocks. But if you're after higher excitement and potential profits, Bitcoin might be worth exploring. 3. Bitcoin, the high-risk, high-reward option. Bitcoin, the largest cryptocurrency, surpassed the $100,000 mark for the first time in December 2024, marking an extraordinary price surge since its inception in January 2009. This rally was primarily driven by institutional investments from companies like MicroStrategy, BlackRock, and Fidelity. Additionally, the approval of multiple Bitcoin ETFs by the SEC further fueled demand, making Bitcoin more accessible to traditional investors. As it continues to gain mainstream acceptance, Bitcoin is becoming an essential asset in many investment portfolios. Often referred to as digital gold, Bitcoin is seen as a hedge against inflation and currency devaluation. However, it remains highly volatile, with price swings of 10% or more in a single day being relatively common. This volatility makes Bitcoin an attractive but risky option for investors seeking high returns. For those comfortable with risk, Bitcoin presents an opportunity for substantial gains. However, its future largely depends on the evolving landscape of global regulations. If stability is your priority, gold may be a safer alternative, offering a more predictable investment option. 4. Gold, the timeless safe haven. Gold has been a store of value for thousands of years, and it's still a popular choice for investors today. In 2023, gold prices have risen about 8%, reaching around $1,950 per ounce. Gold tends to perform well during times of uncertainty. Whether it's inflation, geopolitical tensions, or market downturns, gold is often seen as a safe haven. Central banks, especially in emerging markets, have been increasing their gold reserves, which has helped support prices. But gold isn't without its drawbacks. Unlike shares or ETFs, Gold doesn't generate income. There are no dividends or interest payments. And while gold can provide stability, it's not likely to deliver the kind of explosive growth you might see with Bitcoin or tech stocks. Gold is a great option if you're looking for stability and a hedge against inflation. But what if you don't want to choose just one? What if you want to invest in shares, ETFs, Bitcoin, and gold together? That's where diversification comes in. 5. Diversification, the best of all worlds. Diversification is the idea of spreading your investments across different asset classes to reduce risk. The logic is simple. If one investment performs poorly, others might perform well, balancing out your overall portfolio. Let's say you invest 50% in shares and ETFs, 10 to 15% in Bitcoin, 5 to 10% in gold, and keep the rest in cash or bonds. This kind of portfolio gives you exposure to growth through shares and ETFs, high risk, high reward potential through Bitcoin, and stability through gold and cash. In 2023, this approach would have served you well. Shares and ETFs have delivered solid returns, Bitcoin has surged, and gold has provided stability amid market uncertainty. But diversification isn't a one-size-fits-all solution. The right mix depends on your goals, risk tolerance, and time horizon. If you're young and willing to take on more risk, you might allocate more to shares and Bitcoin. If you're closer to retirement and looking for stability, you might lean more toward ETFs and gold. The key is to find a balance that works for you. And remember, investing is a long-term game. Markets will go up and down, but staying diversified can help you weather the storms and come out ahead in the long run. 6. Building your portfolio, a step-by-step approach. Now that we've explored the options, let's talk about how to build your portfolio. Start by defining your goals. Are you investing for retirement, a house, or wealth growth? Your goals shape your strategy. Next, assess your risk tolerance. If you're risk-averse, lean toward ETFs and gold. If you're comfortable with risk, consider shares and Bitcoin. Choose your asset allocation based on your goals and risk tolerance. A common rule is to subtract your age from 100 and invest that percentage in stocks, with the rest in safer assets like bonds or gold. Rebalance regularly to maintain your target allocation as investments grow at different rates. Stay informed about market trends, interest rates, and geopolitical events that could impact your portfolio. 7 common mistakes to avoid. Even experienced investors make mistakes. Avoid overconcentration by diversifying your portfolio. Don't put too much into one asset or sector. Timing the market is nearly impossible. Focus on long-term investing instead. High fees can erode returns, so opt for low-cost ETFs and platforms. Emotional investing, driven by fear or greed, often leads to poor decisions. Stick to your plan, even during market volatility, to stay on track towards your goals. 8. Should you invest in shares, ETFs, Bitcoin, gold, or all together? So, should you invest in shares, ETFs, Bitcoin, gold, or all together? The answer depends on your goals and risk tolerance. Shares and ETFs offer growth potential, Bitcoin offers high risk, high reward opportunities, and gold provides stability. By combining these assets, you can build a diversified portfolio that balances risk and reward. As we wrap up, here's a question for you. What's your investment strategy? Are you a fan of shares, or do you prefer the stability of gold? Maybe you're excited about Bitcoin's potential? Let me know in the comments below. I'd love to hear your thoughts. If you found this guide helpful and don't want to miss more exciting content, don't forget to like and subscribe to this channel. Happy investing!